Hey. Greg Reitz and the Reitz Real Estate Teams. It's a big Friday thumbs up for a fantastic Friday here in Fresno, California, EXP Realty. Guys, today's grab your pen, grab your coffee, your drink. You know how I say it every week. Grab your toolkit to take some notes. Today's real estate podcast from the Reitz team, EXP Fresno, is about real estate investments and why real estate is the best investment and always will be. Let's go. Give you about 10 more seconds. Let's rock and roll with these about 8 different reasons why real estate is the best investment. Everybody ready? Let's go. This is live, guys. Now, I've been in real estate. Let me give you 30 seconds about me and our real estate team here in Fresno. We've been in business about 16 years full time. Uh, we produce at a pretty darn high level, and we do a lot of investors and a lot of investments and investors from multifamily to single family to remodeling, selling, and flipping of properties to buy and hold single families, condominiums, other assets. Okay, farms, ranches, income producing commodities. We've got the realm covered, including commercial property. This is generally the same for any real estate investment that I'm going to get into over the next 10 minutes, and why real estate is your best asset and your best investment for now and in the future to come. Okay, guys. I have many assets in real estate myself, and I do have stocks and other things tied to that market. But I got to tell you, our real estate in the Wrights family far outperforms those that stock market and the exchange there. It's just a different cat, and it works great. Okay, on the real estate side, what it, the best investment is real estate, and why it always will be. Why? Why is that? Well, let me give you straight shooter the truth here today. Number one, appreciation of your asset, guys. Appreciation. When you're investing, don't you want your asset, your appreciation to go up? So if let's say you put a $10,000 in the stock market, you want that asset to go up. The stock market will basically, the only way you're winning in the stock market, right, is your asset. You pay 10,000, it goes up 10% a year, right? On an average over a 20-year span, you look at the history. So each year you go from 10,000, then you go up to 11,000, then to 12,000. You know, 1,000 or plus a year. I get that. However, real estate, your appreciation is in the asset. So you get that number one. You get that number one. A real estate investment typically, if you use doubles in value every 15 years, 5, 10, 15. A real estate asset usually doubles in interest every 15 years. Write that one down. That's huge. So, an example, you paid $500,000 for a sixplex in Fresno, California. In 15 years, that's probably going to be worth about $1 million. That's a really accurate, honest average. Now it cycles with the market. Sometimes it'll double in value in 4 or 5 years if the market's hot. But on an average, if you look back 60, 70 years in the market that you're in, you'll see it about every 15 years double in value. Huge appreciation of asset, doubling in value every 15 years. Number two, low risk. It's a low risk investment. People are always going to need rentals, no matter what the market's doing, no matter what the jobs are doing, no matter the situation with the economy. If the economy is good, people are renting. If the economy's challenged and depressed, people will rent even more. So you're always going to have renters in a good quality investment. Okay. So low risk, you can touch the products, and it's not volatile as stocks, 401ks, and retirement plans like that are much more volatile. Your money is not tied up in the real estate investment. You can always sell it. It's another benefit. Number three, income on the asset. Now and later, as stocks are only later. So you put it in the stock market, great, good for you. That's a step in the right direction. However, you're only going to get that return at a later time, right? Unless you take it out and put it into something else. Otherwise, you're going to get taxed in capital gains. So you have to roll it over, okay, into something else. You can only touch that money at a later time. Generally, in real estate, you're getting your income monthly right now. So you have a real estate investment, You have the asset. Let's say you have a 6 unit apartment building, and you're making 6,000 a month gross rents, and you clear, let's say, 1,800 a month, clear net profit in your pocket. You get that in your pocket in your checking account every month, month after month, right now, and you're only taxed on that small amount. You don't get that in the stocks. Okay, look at that. So you get your income every month. Yeah, you can take that income and then invest it into something else. You get huge tax benefits. Tax benefits by having properties, depreciation of the asset, and other benefits that the stock market does not give you. So I've already given you like 6 reasons why it's so much better and it is the best investment. Number five, equity build. Equity build. So we already talked about appreciation. About every 15 years, the asset doubles in value, or 7-8% per year in value in a normal real estate market. That's different than equity. Equity build is as you pay your monthly payment on your mortgage every month. That payment, that principal amount that's owed on that asset goes down, right? It goes down. So as it goes down, your balance on that asset, that real estate property, the balance goes down, yet the appreciation generally is going up. So you have appreciation and equity. So it's huge that every month you know that that's just stockpiling in there and it's compounding equity to your best benefit. So your principal on the loan goes down, your appreciation and equity both go up. Rental increases figured in every year, and it continues to grow and rise. So here's what we do with our rental increases, guys. With our property manager here in Fresno, California, we have many single family and other investments. And here's what we do: I put a 3.5% increase in my rents every year, whether the market's going up, down, or sideways. Now, in the last year, I've raised my rents upwards of 20%, where I could legally do that in the state of California, because the rents have went up 20% in one year in Fresno, California, and that, a lot of areas across the nation. But generally, in a normal real estate and rental market, it's about 3.5% in all of my contracts on our rentals. That's 3.5% more income. That helps pay for additional insurance, property taxes, repairs, things like that, and still we make a little higher profit. Net profit comes in. So that's huge. You get automatic raise every year on your rentals. Big, good stuff, guys. You can do a 1031 tax deferred exchange. Do you know what a 1031 tax deferred exchange in real estate is? A 1031 real estate tax deferred exchange. For those that answered right, yes, it's a real estate exchange. So let's say you have the 6 unit apartment building, and you say, you know what? I found this 20 unit. I want to move up to 20 units. I don't want to pay any capital gains or taxes. You can actually avoid that with a real estate tax deferred exchange, 100% non-taxable if you do a 1031 exchange. It doesn't even have to be like property. So you could take a 6 unit and buy a ranch if you want to. It's legal now. But let's say you wanted to go from 6 units to 20. You take that 6 units, you sell it top dollar with the right team or so another agent that you know. You sell that asset. You set up a 1031 tax deferred exchange with the escrow and title company that you're using to change ownership, and through that process, in the 45-day period, let's say, now you have a tax deferred exchange. You don't touch the profits from that asset. You leave it in the escrow, and from the time of close to the time of close, you have 45 days to get that property and name those properties. So get something in contract within 45 days, or more than one property. So you have all the time where you're in escrow of that asset, and then when you close, another 45 days to get property or properties in escrow and accept an offer on it, so you can roll that money into those assets. You don't have any capital gains. Huge. I love that part. Here's another part, and this is huge, huge. You can take that assets and you can refi and pull funds out of that property. You can pull funds out of that property with no tax consequences. Refi the property, no tax consequences, boss. That's huge. You can't do that with stocks. So you pull out a property. Let's say you pay $200,000 for a duplex. 200,000 you paid. You put 20% down. So you put $40,000 down. Your principal balance at start was 160,000, right? 160. You go 7 years, you already know you're getting about 8% a year. Your value went up about 50 to 55%, at least 50%. So now that value was 200, now it's 300 after 7, 8 years. 300,000. Your balance was started at 160 because you put 20% down from 200. So your balance was 160. Your asset is now 7, 8 years later 300, but that balance, the principal balance, is down to about 120 now because you already have 7 years paid down on that loan. So 120 on the principal balance because the mortgage buy down every month, equity build up 130, and appreciation of the property $180,000. You can generally go up to 75% loan to value. That means that you can pull 75% value out of that property to the appraised value of 300,000. So that would put you at about 75%, 200 and what 75 cents, 225,000. So you could pull from your 120, you're going to 225, 75% loan to value. The property's worth 300. You're pulling out another 75, $80,000 to borrow non-taxable on that asset, and you can use that for down payment on another multi-unit property, single family, commercial property, whatever you want, you name it, you claim it. And that is your down payment. Yes, it is. And now you can just compound your assets without having to keep making more and more money from your career. It's huge, guys. That is huge. And you can take that refi and you could put it some in the market if you want. You can buy something that you want to buy that you've been holding off in your life, a sports car or something else, and that's just money from that property. It's huge. Okay, I would always want to reinvest it, but have some fun in life too. Don't forget to do that. Okay, so you can refi, pull the funds down. There's no tax liability. Any questions on any of that? Let me tell you this. I, Greg Reitz, and my wife have many real estate assets, and these are by far our best investments. I just explained at least 10 reasons why they're the best. Nothing compares to it. This is the gospel, it's the truth of real estate. If you have any questions or thinking about multifamily, commercial, residential, or other properties, I am your agent to help serve you and our team in the real estate Fresno area. Free expert service here, no fees for our buyer services. We have many real estate investors working with us, financial brokers, lenders available for you. We desire to help you make this a reality and show you why real estate is your best investment. Let's go. And remember, success is one step out of your comfort zone. Success is one step out of your comfort zone. How much is that money that you have in the bank right now making? 1%, 2% in the savings account? Let's get you up at 15 and 20% in real estate. Let's do this the right way. Call Greg Rice or text 559-260-1777. 559-260-1777. Guys, I look forward to talking with you. Your investor professionals out of Fresno, California, Reitz team. Greg Reitz, eXp Realty, Fresno, California. Greg and Kylie are waiting for your call. Bye now.